Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. The markets experienced quite the sell-off after the quarterly report on June 30th. And as we can see from the charts, the market came in and we saw reasonable support coming in right before the report hit. After the report, though, the market came up and then dropped very hard back into our next key level of support, right up against our natural key support levels. As we continue to watch the markets right now, we sit very close to support, but as the market looks to be making its way up off of support, and after having been quite oversold, we have very good resistance back at that 390 to 391 area, which we anticipate if this contract is able to make its way there, we would be looking for another sell-off opportunity. A few key areas of note for this September corn contract would be that 396 number, as well as just below we have 372 as one standard deviation away from that point of control area. Just below that we're looking at 350 and 3/4, which is about where we saw the significant lows occur over the last 4 to 5 trading days. Moving on to the December contract, we see much of the same pattern. The market had a very significant sell-off. Coming in, it had a nice continuation pattern, at which point we anticipated a move back down out of the other side, similar to what it did coming into it. We see very good support coming in at 347.5. This is exactly where support came in, and the market has since bounced from there. We are in the midst of a consolidation, and today's move is fairly explosive to the upside, but we'll see if it's sustainable. Up ahead, we have 385 and 3/4 to 386 as key resistance, and then just above that, we have the 405 and 3/4 number. Right now, a key level to keep a watch on is 366.5. I would anticipate some strength above that number, and as well some weakness below. And should we cross below the 347 number, we should touch 329 at a minimum. The low on this contract came in at 346 or so last week, and right now one standard deviation above that number would be 385, and then one more number above that would be 420 or 419 and 3/4. So those key levels are what we're going to be monitoring right now for key positions. So for someone who is actually in the market right now, it's important to make sure that we take advantage of advances in the market to lock in some prices, because we may not see these numbers again. September beans has been very interesting in its movement. 2 weeks ago, we believed that 1083 and 3/4 was going to be very good support for this market, and it did prove to be as such as we projected. Now, from there, the market moved up for about 5 days, but you'll notice here with this natural trend line that we had posted up against the market found very good resistance here before it did in fact collapse back down. We're currently sitting at very good resistance one more time, and we're up about 4 days from this key low near the 1042.5 number. So from here, the market does have the potential to actually go back and retest the 1092, rather to go back up and retest the 1192 number, which was the major high that it had posted back in June. So as we look at this market right now, it's going to be very important to see how these legs look to pan out. We are 3 legs down from this high, and what I mean by 3 legs down, we have this one movement up, then back up again, and then this leg down, which is typical of an ABC movement correction. So depending on the strength of this low here will determine whether or not we're able to test 1192. If the market fails near the 1140 to 1150 number, which is near the previous highs that we see here, then the market then could very well continue lower. So for now, it's important to watch key levels as the market traces out this retracement that we're in right now. Another reason to have the 1150 to 1160 area on our radar is 2 standard deviations above the point of control actually sits at 1153. So as the market makes its move up here, if it's able to get up to this 1150 or so area, we anticipate potential resistance If it's able to break through, then getting up to the 1192 or higher is then possible, at which point we'd be looking for the market to make a move and finally make its decline into the summer or into the balance of the summer month. November Beans has been very clean in its movements. Both of the key support areas that we were looking for have come into fruition. If you look back at the 1076 number that we showed you 2 weeks ago, the market came in, touched this area, and has since bounced from there, just like the September contract at its key support level. From there, it moved up and then broke back down again, and now we're finding that we had very good resistance. Rather, we had very good support at 1121.5, which is where the next major low has come in. The market then has since made its way up. Today we're seeing a little bit of resistance near this 360-degree level of 1120, but we'll see whether or not the market's able to make its way past there. Again, the next level above that would be 1153.5. This would be a key resistance level to be looking out for. And as we can see in the stochastic here, the market is making its way up, but the last time it came up through here, about halfway up, it failed. So there is the possibility the market could come in and only make it about halfway up and then fail again. If he's able to make it up past the overbought or into the overbought area, then that would be confirmation that we could see prices venture to the previous highs of about 1188 or so. Similar to the September contract, 2 standard deviations above the point of control is at 1153 for this November contract. So part of what we'll be looking at here is this previous high as a key area of resistance potentially for this contract if it makes its way up through there. Upon breaking it then, it's probably likely that we would retest the previous highs. And so again, 1153 looks to be an important number for this particular contract, just like the September contract. Wheat futures have clearly been in a weak position. Over the last month, it's done nothing but really make a very strong straight decline. It bottomed a few days ago near the 415 3/4 number and has since been consolidating over the past 5 to 6 trading days or so. Today it's broken out of that consolidation, but it's given up much of the gains that it had made. And what we're looking for this contract is actually continued weakness on its way down. Now, it is possible that we could see a correction. We're looking for somewhere in the neighborhood of 25 to 38% off of the lows. 25% retracement would sit at 445 1/4, and a 38% retracement sits at about 461. It's possible he can make it all the way up to perhaps 467.5 to 478, but around that area we would anticipate or would be looking for very strong resistance here and for the market to really push back down again. It's been oversold for quite some time and is just now starting to make its way out, but it's not really been able to do so with very much strength. So when we have an extended oversold period like this, it's more of a confirmation of a downtrend more than it is an indication of a potential low coming in. So pullbacks that remain inside of the range of no more than 50% or so are very good sell opportunities for this particular futures contract. In light of the current movement, we have the point of control that sits at 493 1/4. 1 standard deviation below that threshold sits at 459. So if the market were to make its way up to about 459 to 460, which is consistent with the levels that we just saw near the 38% retracement, again, we do believe that this stands to be potentially a very good resistance point for the market to turn back down again. We'll close out today's session with a look at the August crude oil contract. The top that was made in the middle of June at about 52 and change continues to hold very well. Since then, we've seen a very nice 5-leg pattern on the way down, and we had a minimum price objective at 44.70 that was reached about 2 days ago. So as we take a look at the market here, we can see a very nice clean 5-wave pattern. Yesterday, we had a very nice move up from that 44 3/4 number that we had looked at for our minimum price objective. And today, prices have turned right back around and has given up most, if not all, of the gains from yesterday. So what we'd be looking at right now is to try to figure out where exactly this move is going to look to terminate. As to whether or not that 44.70 area is going to be a good hold point. But if it breaks below this area, we're probably looking at our next price target of $40 even, which is right at the 180-degree mark. So that would not be unusual for this move here, especially given the way in which this crude oil contract is moving. Thank you so much for joining us for our weekly market update and look forward to touching base with you again next week.